Welcome to Intro to Forex. Now, in this module, I'll be going over the basics of what the foreign exchange market is. Forex, short for foreign exchange, refers to the global marketplace for buying and selling currencies. It's the largest and most liquid financial market in the world where currencies are traded 24 hours a day, 5 days a week. Now, participants in the foreign exchange market include banks, corporations, governments, financial institutions, and individual traders. The primary purpose of Forex trading is to facilitate international trade and investment by allowing businesses to convert one currency into another. Not only that, but Forex trading provides opportunities for people like you and myself to profit from changes in currency exchange rates. Traders can buy or sell currency pairs such as the euro and US dollar, or the US dollar and the Japanese yen, with the aim of making a profit based on their predictions of how currency values will change relative to one another. Now, believe it or not, you've probably have participated in the foreign exchange without even realizing it. If you've ever traveled to another country and you have had to exchange your native currency to the currency of the country that you were in, let's just say, for example, you exchanged your USD to the Japanese yen, you've exchanged one currency for another. Or also another way of looking at this is that you've sold your USD and you bought the Japanese yen, then congratulations, you've essentially participated in the foreign exchange market. If we take it one step further, let's say before you fly back home, you stop by the currency exchange booth to exchange that yen that you have remaining and notice that the exchange rates have shifted a little bit. It's these changes in the exchange rates that allows for us to make money in the markets.